I am really excited about this analysis because when we look at Imperial Brands, we see two stories. One, tobacco consumption is declining, the industry is dying, and investing in it is a dead end. And the other story, tobacco industry is finding new, fast-growing markets, and it is creating new products for the old markets. The future is bright. So let's find out which story is true, because such knowledge can give us an edge over other investors. Imperial Brands is a British tobacco company. It is the world's fourth largest cigarette company, and its brands include Davidoff, West, Golden Virginia, and Drum. According to the World Health Organization, tobacco consumption in the US went from 32.7% in the year 2000 to 22.3% in 2022. And it is projected to fall to 20.4% by 2025. So the market is shrinking. Or is it? For example, Africa's improving economy and young, fast-growing population could drive a surge in smoking. Since 1990, the number of smokers in North Africa and the Middle East increased by 104%. By 2025, it's estimated there could be 84 million smokers in Africa alone. Eastern Mediterranean region is another place where we see a substantial growth. So it is not that simple. Some markets are shrinking, but others are growing. If you were to invest $1,000 into this company 10 years ago, you could buy around 24 shares. And now they would be worth something close to $523. But luckily, this company also pays dividends. So in that time, you would get $531 as dividends. So if we add those numbers together, we get $1,054. And that is a gain of 5.4% in 10 years. Well, that does not even beat inflation, so not a great success. Individual insiders, that is a check. 6.8% of the company is owned by individual insiders. So the management has its skin in the game. They are going to take good care of the shareholders because they are the shareholders. And are they buying right now? That is an X. In the past year, we saw a lot of buy transactions from insiders. But in February, the CFO of the company sold shares worth over £1 million. And that is around half of his shares. And the super investors own this company. That is a check. I was able to find one super investor, and it is Dodge and Cox. And are they buying? That is an X. In the last quarter, we didn't see any changes to this position. Return on invested capital, that is an X at 8.1%, 10-year median returns. And we want to see this number higher than 10%. So it's close, but not close enough. And what do we know about net profit margin? It is an X at 12.9%, and the industry median is 14.9%. So the margin is not bad, but they don't have a real edge over their competitors. And now let's take a look at share buyback. It is a check at minus 9.6%. So over the last 10 years, they reduced the number of shares by almost 10%. That is very nice. And the debt? It is an X. It would take over 2.5 years to pay the long-term debt with a current free cash flow. And we want to see it under 2 years. So it is not alarming, but not ideal. Revenue growth. That is an X at minus 1.1%, 10-year compound annual growth rate. So revenue is shrinking. That is a bad sign. They are either not adopting new technologies and new products fast enough, or their growth in Asia and Africa is just too slow. Free cash flow growth, that is an X at 0.9% in the last 10 years. So at least here we see some growth, but it is extremely small. And earnings per share growth, that is an X at 7.8% in the last 10 years. We would like to see it higher than 10%, so it is an X, but thanks to the share buybacks, this element of growth is looking, well, really decent. The dividend yield is 8.6%, so shareholders can expect to get $1.85 annually as dividends. And the payout ratio, that is an X at 58.5%, and we want to see the payout ratio somewhere between 20 and 50%. So that is actually not that bad. A lot of other tobacco companies have much higher payout ratios. So it is on the high side, but nothing to worry about. This dividend seems secure. And what about dividend growth? It is an X at minus 5.5% 5-year growth rate. And as we can see, the dividend is changing all the time because it is influenced by the results of the company. If business is fine, we get more money. If it's slow, our dividend gets smaller. It is also influenced by currency fluctuations because the dividend is paid in pounds, but it is not really a major factor. And if you would like to learn more about dividend investing, then check out our really useful dividend investing course. The link is in the description. Price to earnings is 6.8. It is one of the lowest PE ratios of all the tobacco companies. So Imperial Brands seems cheap at the first glance. But let's value it using a discounted cash flow formula. And for that, we will have to estimate the growth of this company. So in the low scenario, we will estimate a decline of 1% for the first 5 years and then a decline of 2%. In the medium, we will predict no growth at all, and in the high scenario, 2% growth for the entire 10 years. So in the low scenario, we anticipate a steady decline in business. Medium shows a scenario in which there is no growth. And the high one is predicting that the company will grow in line with the predicted growth of the entire tobacco industry, which is 2.1% annually. So, with such estimates, the intrinsic value in the low scenario is $32, in the medium $37, in the high scenario $44. But we have to always apply a margin of safety to these prices. I use a 30% margin. So now we get in the low scenario $23, in the medium $26, and in the high one $31. And the current price is around $21. So it is all in the green. Even with small decline in the near future, the price looks interesting. Like with most tobacco companies, dividend is a major factor. And in case of Imperial Brands, it is changing all the time. So the yield may look very appealing right now, but we have no way of predicting what will happen in a year or two. It may go up, but it may go down. And when we look at our Stock Ranking Pro, we see that they got the financial health score of only 1.5. Philip Morris International got 2.0, and Altria also has a score of 2.0. So Imperial Brands is okay, but it is nothing special. Growth is also slower than in other tobacco companies, but the price is very interesting. It may not be the best company in the industry, but when we consider the price, it may become the best investment in the industry. And if you want to compare Imperial Brands to its peers, then here are my analysis of British American Tobacco and Altria. Thank you so much for watching and see you in the next one.